friends, and welcome to the CUInsight Network podcast. My name is Lauren Culp. I'm the publisher and CEO at CUInsight.com. And it's my job on this show to have conversations with the thought leaders who support the credit union community. We get to identify the issues that are affecting credit unions and have a discussion on all of the best practices that exist so that we can all learn from one another and improve our credit unions. My guest on today's show is Pankaj Jain, the president and co-founder at Scienaptic. I'm really excited to have him here, so let's jump right into the conversation. Pankaj, welcome to the show.
Thank you, Lauren. Thank you very much.
Well, I'd like to start with a little bit of background on you. I know most of us who work in the credit union industry didn't really grow up thinking someday we would get to work with credit unions. So I'm curious, what did you want to be growing up?
Growing up, I came from a humble background. I was early entrepreneur. I started my first company when I was 14-year-old to fund my, extracurricular expenses. My father and my parents didn't have big means. And then I wanted to do engineering. So I got into engineering college and, I continued my entrepreneurship streak and I built some search algorithm. I built some software to calculate bending moment and shear force. And then either I've sold it off to the companies which would use them for a greater good, or I left with my co-founders of those companies to run the companies. But clearly I didn't think of growing up that I would be working with credit unions one day, but I did have the entrepreneurship streak from very early in my childhood.
Wow, that's amazing. I love to see that. I think I haven't heard too many folks share that they, all the way back as a kid, that they were working on some different business ideas. So what was the inspiration then, or talk us through the journey to get to this place where you are now the president and co-founder at Scienaptic?
Yeah, so I came to, United States. Before that, I was working with a subsidiary of Citibank, which got venture funded by Citibank Venture Capital. It used to be called Citicorp Information Technology Limited, later renamed itself as iFlex, which got finally sold off to Oracle, which is now Oracle Financial Services, about $4-5 billion business there. So I came through them to New York City before living out of bag in about 10 plus countries. And then when I came here, even though I was working for a bank, it was so hard to get a credit card because I was new. I was thin file or no file, and literally had to work my way for 2-3 years to get my first credit card. So that was my first experience of getting credit in United States, even though I was making good money. But there was no way for those financial institutions to be able to get access to the data. They were totally relying on what they were getting from Bureau or, FICO, which is essentially I was literally thin file, no file. So that was one experience. And then while working in a spin-off of G Capital, which is Genpact, I met the co-founder who's also CEO of the company with the same name, Pankaj Jain. And then we decided that I think that with the advent of the data readily available, the technology becomes so commoditized that you can really run machine learning and AI algorithms within a computer in your palm. We thought if you'd come up with a piece of technology which can help people like me when I arrived in this country, or more people, like there are about 62 million people who lack credit history to obtain a traditional credit score, or about 19 million consumers who have insufficient data on their credit files, and about 26 million people are literally credit invisible, like I was when I came about 21 years back. If we could come up with a piece of technology which can harness this data, which is available on their economic story, and also able to use the raw bureau data, I think that we could tell a different story on those individuals by not simply denying that. So I think that, from some of the business experiences and personal experiences, that actually drove us to start something where we could actually help communities and people and, to be able to build their financial lives and finally send their kids to college and, get that credit card for their daily expenses or buy that home or get that car to work. That was the inspiration. It originated from our personal experiences, both in personal lives and businesses.
Wow, that is such a great story. And I love the personal aspect too of how you once were that person and then really were able to build a business around meeting the needs of those types of consumers. As we start to see conferences coming back to the credit union space, and hopefully you and I get to run into each other at a conference soon, I'm curious, what is the elevator pitch you would tell credit union folks on what Scienaptic is and where you can add value for credit unions?
Yeah, absolutely. And I'm more than the pitch. I would say that I think we are more into the of education of credit union. But when we started, educating credit unions about 2, 3 years back, we realized that there was a notion which was prevalent in the credit union world was of the fact that there is a credit union quality and then there is everybody else, or a big bank quality, or a large fintech quality. We wanted to break that because there's nothing called credit union quality. Credit unions are essentially the most simple, most humble, most giving people in the entire industry. And I've worked in financial services for the last 23 years, so I can say that with confidence, having worked with more than 1,500 credit unions now. So we wanted to first of all break that notion that credit unions can essentially have that top quality which a big bank with millions of dollars of investment, hundreds of people could build. It's just that they need to be expecting that for their members or wanting that from the service provider. So we wanted to be able to do that. And from the education perspective, given that they are simple people and really not for profit, helping communities and members they serve, get on their financial life, our message is very simple. Today, if a credit union gets 1,000 applications through the door, mostly they're approving 30-40% of them. Wherein if you look at their charge off and risk profile, it is less than 30-20 basis points. So there's literally risk as compared to the banks or the fintechs is really not existing. It is the ability of the credit union to be able to say yes instantly and with confidence to the member who's applying for a credit product. I think that is the ability which is missing because it's 100% dependent on what they get from, bureau or a traditional score. So our message is very simple that with our technology, you can actually use the membership data. So if I were a member of a credit union, they have a 10-year, 15-year, 20-year history of my debit card swipes and the transaction which I have with my checking and savings account, and or the loan product which I've had with them, whether I've paid them off, or I'm continuing to pay. So they have a payment hierarchy and a story with me. And when they pull the bureau data, they actually are pulling a lot more information on that member with respect to what was PJ 30 days back, 60 days back, 90 days back. Is PJ trending upward from 640 to 720, or PJ is trending downward from 760 to 680. So, and then 720 is also not same when you look at the underlying data. 720 may be coming from two credit card trade lines of $300 each. Another 720 has 15 trade line, including the auto, home equity, mortgages, unsecured consumer loans, and so on and so forth. So when you look at the underlying data, you are able to tell a better story, better economic story on members' intent to pay, ability to pay, and probability of default. And our technology is able to harness that data without credit unions spending any more money because they already are either paying for this data or have it, to be able to say yes to those members more confidently. So we are just saying very simply that nothing needs to be changed. It's plug and play technology as if it's a Netflix or an iTunes subscription. All you need to do is give us access to your data and we will be able to tell you member by member that whether you can say instantly with confidence. In most cases, we've seen anywhere between 15 to 40% increase without changing anything on the number of applications they receive every month.
That sounds like an amazing opportunity for credit unions. And you touched on this, but I know one of the challenges that so many credit unions face is achieving those effective underwriting decisions that are accurate, but also fast. And so can you talk to me about the ways that Scienaptic supports credit unions with those underwriting efforts and maybe the impact that you've seen on ROI? I know you talked about approval rates, but also the impact that you've seen on losses for the credit unions who are using that too.
Yeah, so I think the technology is very simple. We just connect to the existing loan origination systems credit union have. And 99% of the credit unions we have talked to, they have, one of the industry standard loan origination system. There are 4 or 5 big players. We already have integration with most of them. So what happens is that when the application gets submitted, nothing changes on the membership front. So the process, the way credit union accept the application, through either the digital channel, whether it's website, mobile, branch, customer service rep, or walk-in. It doesn't change. The moment they submit the application, the details of those application, along with the raw bureau data, not any cutoff bureau or the way current LOS look at the bureau information, but the entire data file is sent to us, and within less than 300 milliseconds, we send a decision back to them, which is a alternate score, which runs on the scale of FICO. So, for example, a FICO on that application might have been 680, but our score might say, no, PJ is actually going to behave like 740. And these are the 20 reasons why PJ is going to behave like 720. So you can approve PJ with confidence with a $20,000 car loan, which he's applying. And, either you can give the benefit of PJ of not having that enough risk, in terms of lower APR, or you can continue to use your risk, matrix as you're using currently the FICO matrix. And then, you can have a better net interest margins. That is the simple way why we are able to say that or make that instant decision, because it's not about, whether underwriters can do that, make that decision or not. It's not about human, but it is about that ability to use thousands of attributes in fraction of a second to be able to come up with the decision where underwriter might look at and take, 15 minutes to an hour to be able to make that decision. And still be not able to look at all the variables, because it's just not possible for human mind to fathom that kind of enormity of the data points in a short span of time. In terms of the impact, I think we are seeing massive impact, as we are seeing anywhere between 15 to 40% lift, in some cases even higher in look to book approval rates. In most cases, the way it is happening, Lauren, is that credit unions are saying, okay, let's keep the risk profile same, which is whatever is the current charge-off rate, which can be anywhere between, less than 50 basis points. Sometimes it is even less than 30, 20 basis points. So we say that, okay, let's keep the risk profile same and then see what is the lifts we get on the look to book side, so that you can approve more members with confidence instantaneously. And that's where we are seeing massive ROI. So, for example, if a credit union were to approve, let's say 40% or book 40% of the loans of the through the door application, and if they are now able to do 55% or 60%, the net interest income coming out of the loan, which are essentially the monies which are currently sitting in checking savings account, inflation adjusted, earning negative interest margin, they can actually not only help those members build their financial lives, which is a greater good of the society, but also increase their net interest margin by deploying those funds or the cash which is sitting in checking savings account, and get to use, so that they can earn more money to be able to use that for the benefits of the membership in future projects. So that's how its ROI pays for itself 10 times over, within few months of deploying this technology. So ROI is a no-brainer, and because our model is a subscription model, so it doesn't cost credit union to pay upfront massive capex. They only pay us as they start using the technology, and then because they start using the technology, they get better look to book rates, and hence it just simply start paying for itself very soon.
Wow. Well, this sounds like a really significant opportunity for credit unions. I know alternative credit scoring, having something like that can help them better identify which members are going to be the ones that actually can pay back regardless of what their actual FICO score is. Such a cool product. And another topic I'd like to touch on with you is one that we heard you're really passionate about. So can you share with our listeners your vision around changing the story from every person is a risk to maybe every person gets credit, and what that could look like?
Yeah, so I think that if you really see the whole history of credit, and there are books written over it, and if you talk to the risk managers, they would essentially say that the way to look at it is that every person is a risk. I think that what we are trying to do is, sort of invert the narrative on its head by saying that every person is trustworthy and it has the affordability and it has intent to pay. It is sort of pivoted on the data which we have in US. For example, there's about like 1.5% charge-off rate, which is lowest in the history of the US for unsecured personal loan, which is essentially the most risky form of the credit, right? Because there's nothing, once the money is out of the door, you cannot recover that money. And, if people had bad intention or not to pay, or people had affordability issue or intent to pay issue or probability of default issue, it should have been much higher. as compared to what we see as the approval rate or the funding rate, which is always less than 50%, around 40% hovering. And overall default rate at all product level remains at about 20% or even lower if you include even, some of the smaller loan products. So what we are saying is that if we change the narrative to say that the way we look at people is that every person gets the credit, and then we look at the risk profile of the people who could be in the riskier category, not from the intent to pay perspective, but from the affordability perspective. I think that's where credit unions do a better job of educating, their membership. So, for example, if I were a member of a credit union and applied for a loan, and I thought I can actually afford a BMW and applied for a $50,000 loan, rather than just completely denying me that loan, if I were to come up with the offer and say, PJ, I looked at your profile and I looked at the three key, scores, which is affordability, intent to pay, and ability or probability of default. I see that you don't have any issue with intent to pay because I can see you're my member for the last 15 years and you have decent monthly average daily balance. You have direct debits coming in. I see you have no non-discretionary spend, mostly, discretionary around housing and food. So it looks like you're a good guy. It's just that probably you don't understand what you can afford. So here is some education. And maybe if you buy that Kia at $20,000, maybe you can still get the wheels and get to your work and drop the kids off to school rather than buying the BMW, which we might decline. So that's the story of what we said, that everybody gets the credit by looking at those people more holistically and more holistic economic story, and then provide that financial education then rather than completely declining that credit, because then we are in the vicious cycle of if you get credit decline, how do you build your credit history? If you don't build the credit history, you remain thin file or no file. So that's what we are changing by looking at the data of the past story of what the charge-offs are, but looking at the more economic and holistic story on the members and the people, and coming up with the education where we find a way to give them credit which is within the affordability range and still being able to issue that credit.
Wow. Well, it's an incredible vision to be able to change the narrative. And I think credit unions are so well positioned to be the financial service providers that are doing this for consumers. And I know Scienaptic is also focused on supporting the member experience at the credit union too. So can you talk a bit about how your solution can impact product offerings, maybe the ease of the process and the member experience as a whole?
Yeah, absolutely. So if you really look at the whole vision of why, Fed or the government originally started credit union was to issue credit. That's why it's called credit unions. So the entire member experience is sort of revolve around how the entire credit process works, right? Right from the application and the offshoot of that, of the credit union started or the bank started taking deposits, whether they're checking the savings account, was to be able to use those funds to be able to issue people loans of different types. So I think the member experience essentially means that if I'm a member, and given what is happening with millennial and more recently with Gen Z, is that they have no patience, right? If they want to buy that car, if they want that personal loan, if they want that BNPL product to sort of pay out that purchase into installments, they need that decision instantaneously, because Amazons of the world and Googles of the world and Apples of the world have made that happen. And so the expectations are that in terms of member experience, that, credit unions should also be able to offer that member experience, especially to millennials and Gen Z, because that's what they expect from all the other digital channel and the companies out there. So from our perspective, if we are able to streamline the member experience from the instant decision perspective, that's number one. The origination where the member is sort of, through the door or proactively applying for it. But the offshoot of that, because I have so much of member data history, I really intimately know that member if I'm able to harness their data. So for example, if I were a member of a credit union who's been for the last 20, 25 years, and now credit union know my family, maybe my kids also have a supported checking accounts or supported credit card, or my wife has. And then let's say if my daughter is coming of the age of 16, where she would need to buy a separate car and a learner's driver's license, if I knew about that, I would proactively offer PJ by looking at his checking savings account activity or the credit products he has, a family story. I might offer PJ a $20,000 Kia loan proactively saying, PJ, go ahead and buy that car for your daughter, rather than going to a loan shark or a, subprime lender at a higher interest rate. So that could be one example where I'm giving that member an experience or surprise by knowing that member deeply and harnessing that and providing that credit product proactively. And the member would be surprised that, that I didn't even apply, but they know so much about me that they're offering me to buy that car for my daughter, which I was thinking about. So that's one example. The other example could be that if I know through that membership, and when I pull the member data on a regular basis, let's say monthly or quarterly, to the bureau information, I might know that this member has other trade lines, maybe with subprime lender, which are of high interest rate. And I see that some credit stress is building up in member, checking savings account as the payments are coming up, every month. I might offer a debt consolidation service to the member saying, I see that you have two other trade lines, with one with personal loan or one with auto with a high subprime lender, and looks like your monthly payment is at a 9% or 8%. If you consolidate that loan by utilizing the equity you have built in your home, that you're taking the mortgage from us, you can actually take at 2.99% and get that home equity to pay off your high interest loans with other lender and consolidate your relationship with us. So those are the type of things we can do. And the other example is, let's say if I were a member, I'm swiping my debit card every month at a Walmart, but my monthly balance is about $200. I typically swipe for $250, but then I cut down on my grocery bill, because of the delay between when I swipe versus when I get my paycheck, either weekly or fortnightly. I might send a text message to the member saying, okay, I see, PJ, that you typically swipe that grocery bill debit card for $200, but looks like your bill is you want to buy more. Why don't you go ahead and swipe that for additional $50 and pay that $10 per month additional, as a buy now, pay later for next 5 months, right? As your paycheck coming. So those are the type of examples which are we can actually do without changing the technology, without changing the technology connection with the credit union LOS, but able to offer that member experience, which a large or big tech is able to offer that without incurring additional cost.
That I think is something that so many credit unions would be interested in, because we know that really ease of use and member experience is, especially digitally, is what members are looking for today. And to your point, big tech and big banks are offering this, fintech is offering this. So it's a really cool way for credit unions to be able to do that too. And I know Scienaptic is a really innovative company. And so from your perspective as a leader, we've seen so much disruption in financial services over the last few years. I'm curious, what are the overall trends that you're seeing for the future of financial services? And what is Scienaptic's focus when it comes to innovating to meet these challenges?
So I think apart from big tech, what you've seen in the search engine space or the e-commerce space, I think financial services is the biggest adopter of AI and the new technology as they offer financial products to their customers, to the members, especially in the credit union space. So from that perspective, as we move along this journey, as more Gen Zs are going to be consuming these financial services, I guess credit unions have to compete with those fintechs and big techs, because, the line between an e-commerce company, like what we have seen with PayPal, or even Amazon is now have Amazon Pay, Google has Google Pay. They have e-commerce. They also offer credit, buy now, pay later, all sort of. So that line between e-commerce, payment companies, financial services, and the banks is blurring. And it's sort of consolidating. Everybody can do everything. So I think credit unions especially need to sort of brace for that self and get themselves ready for expectations, to match the expectation from Gen Z, which is really instant gratification. And it is embedded in everything from digital products, right? If you know about me, that why don't you offer pre-filled application? Like, if you know about me, why I have to apply for a credit product? Why don't we, like Amazon product recommendation? What is the next best product? So if I have the credit card, if I have the mortgage, why are you not proactively offering me a home equity to consolidate my debt? Some of the examples which I gave. If you know my family, why are you not proactively offering that? Why don't you take credit card for your kids as they get into high school and college? Why don't you buy the car for them? So So I think it is embedded in every step of the process, how Gen Z and millennials are consuming digital financial products. It is no longer that, they need to visit a branch, because you can do entire authentication on mobile phone. You can scan the driver's license. You can do KYC. You can do ID verification. Everything is possible, and it's already happening. So it is not future. It is happening. So I guess from that perspective, we are basically trying to be the company who actually enable smaller lenders, credit unions who do not have millions of dollars of budgets as a capex investment, or hundreds and hundreds of people to invest before realizing the potential of these digital innovative technologies. So we want to make it available and democratize that, so that there is a level playing field for all the players, including smaller players in the ecosystem.
Wow. Well, it is so great getting to hear all of these goals of Scienaptic and the way that you're taking the company. I wish that we had more time to talk about it, because it's so interesting. And I think so important for credit unions to be able to compete and really hear some of this. And as we wrap up the show, though, I always like to have some fun with rapid fire questions to let our listeners get to know you a little bit better as well. So we say that the questions are rapid, but your answers don't have to be. So if you are ready, we can dive right in here.
Absolutely. Let's do that.
All right. What is a recent purchase you made that you didn't know you needed, but that has become something you just cannot live without anymore?
Yeah, believe it or not, it's the ring light for my computer, even though we're coming out of pandemic. But I think we all of us got so used to doing, Zoom calls and always on camera with clients. And it has increased my productivity so much. While I want to be on the road and I travel a lot, but this ring light actually just brighten my face, and people can see my smiling and happy face, and that just oozes out positive energy. So now, I've actually stayed away from buying that. I've seen a lot of people doing it, but finally I bought it, at the end of the pandemic. But now I can't live without it. I just keep it on all day.
I love that. That reminds me, my ring light is broken, so I should go get another one. All right. Well, when you hear the word success, who's the first person that comes to mind for you, and why?
So I've been a big fan of Elon Musk. And the reason is not because, just a lot of people say that he's a visionary, but also because he's the one who's done the execution of the vision very, very successfully. Because, there's a lot of people who can daydream and, talk about the big vision and all that. But ultimately, like we are trying to do in Scienaptic, is that ultimately it boils down to who can execute that vision. So I'm mighty impressed with his vision and, how he's changing the world. And, I've been tracking the companies he's built or he's continued to build, which is completely transformative. And, there are a lot of naysayers. And when we were starting Scienaptic, who would say, things against that. But ultimately, grit is on your side. If you continue to follow your passion and continue to execute, I think things happen. And ultimately, people turn around, and then, people start looking up to you. So I'm really, really impressed with what he has been able to achieve with some of the things he has been able to achieve. So Elon Musk is my inspiration.
I love that. Yes, that's such a good point, that there's the vision, but then there's also executing the vision.
Yeah.
All right. A random question for you. What are you listening to most right now? Is it music? Is it a podcast? What is that thing you're listening to the most?
Yeah. So when I have downtime and, I'm mostly listening to the mindfulness music. And basically, I think that's what I made a little bit of lifestyle, is focus on now, what you can do, what you can change, what you can impact. Because if you make that right, then future is almost bright, right? That's the whole thing. So I'm just most of the time listening to mindfulness music. There's a lot of good music, and I try different things. But that's what I'm doing, nowadays since I've started Scienaptic. So I think that's helping me keep my focus and, sort of cut down the noise.
Absolutely. I love that. All right. Any books that you have gifted or that you just think everybody should read?
Yeah, I'm a big reader, and I keep, sort of sharing the good books I come across. I think recently, although they are not new books as such, but, there's a book called Influence, the Psychology of Persuasion by Robert Cialdini. I think it's an amazing book, the anecdotes of how to sort of influence people and And this is very important, especially in the credit union world. It is not about pitch. It is about how do you show them the art of possible, right? It is about that, right? And everybody has to play a part in that. And I think that book is amazing. And the second one was, Sapiens by Yuval Noah Harari. I think that history of mankind, it is so amazing. I think the central point is that the reason why humans have been able to come at the top of the food chain among every other animal in the animal kingdom is because of our ability to cooperate in large numbers and across boundaries. That was one single message. And I think that actually is true even today as we are moving to Homo deus and people like, Elon Musk, what they're able to do by bringing a lot of people together to cooperate on something which they believe is possible in the future. And the third one was talking to strangers, which is very interesting because I get to talk to a lot of strangers, especially look at the credit industry. 2 years back, I knew nobody. Today, I am on the speed dial with at least 1,500 to 2,000 people, the C-suite in the credit union. Right. So that's Malcolm Gladwell's book called Talking to Strangers. It's a very interesting book. It just shows that you should always think about the other side, what people are thinking, and empathize with that.
Absolutely. I know Malcolm Gladwell was a keynote speaker at the CUNA GAC a couple of years ago. He's got some really cool books out there. I love those. So one more question for you, and just to say for all of our listeners here, we will link to all of those books. So if you are interested in the show notes here, we'll make sure that we put some links out so that you can go find those books yourself. But my last question here, so the calendar's empty. What would you be doing to unwind outside of work?
So I've been runner, like I've participated in 5K, 10K challenges, corporate challenges run by JP Morgan Chase in Manhattan. I live in Manhattan. Even this weekend, both days, I was in Roosevelt Island running with my son, doing yoga outside. Yesterday, we were in Central Park. So I'm outdoor person. Whenever I find time, yoga, running, and anything outdoor with my family. I've been to almost all mountains, Mount McKinley, Mount Fuji, you name it, Andes, Alps, so I do a lot of outdoor activities whenever I get time, and I do a lot of travel when I have longer time or vacations with my family.
Awesome. I love to hear that. That sounds, the mountain travel, that sounds amazing. I'm sure those have been really, really beautiful views. All right. Well, we're going to link to everything that we've talked about today in the show notes, like I said. And my final sort of bonus question for you here is, do you have any final thoughts that you would like to share or final asks of our listeners today?
Yeah. So I think the final thoughts are change is hard, right? But change is also one thing which is constant. So I would only advise people that I think that basically if change is coming, just put your listening ears. You can always ask for more proof, but I would say that accepting and adapting to the changing needs of the consumer behavior or how technology is changing the way we live and interact, both socially and professionally is going to stay. And we are here to just support that. And I would say that accepting change is the only thing which can, which has survived the human species. And I think that will continue to be the case.
Amazing. Well, what a perfect way to wrap up. We are going to link to contact information for Pankaj and his team as well here. So anybody who wants to get in touch with the Scienaptic team can get some more information. So check out the show notes for those. Thank you again, Pankaj, for being on the show. I hope that you stay well. Hope we get to run into each other in person soon. And thanks to all of our listeners today for tuning into the CUInsight Network podcast. We'll be back again next time.